In this presentation, we will take a look at multiple choice questions related to ratio analysis, going through those questions and then practicing test-taking skills with them. First question, the reason for financial statement analysis does not include A, tools to improve efficiency and effectiveness, B, tools for internal users, C, tools for external users, D, tools to measure performance, E, tools to assure investors of profits. Let's go through this again using the process of elimination. The reason for financial statement analysis does not include either A, tools to improve efficiency and effectiveness. Now, the financial statement analysis, you would think that's kind of the goal. We're trying to analysis to improve those things, so I'm going to cross that out. B and C says tools for internal users versus tools for external users. And the fact that I have that contrast between the two makes me think, well, maybe it's one of those two, because sometimes when you have that contrast in a multiple choice question, it's one of those two. So I'll keep those for now. D says tools for measuring performance, to measure performance. And you would think an analysis of the financial statements would measure performance, possibly among other things. So I don't think that's it. E says tools to assure investors of profits. This is another one that I'm a little dubious about because of that absolute term of assure. So if it said, to allow investors to think about profits, then I would be less dubious about it or less sure about it. But the fact that it says assure is one of those limiting factors that's an absolute term that often is going to take out multiple choice questions or be an indicator that it's not a correct answer. So let's go through this again. The reasons for financial statement analysis does not include either tools for internal users, tools for external users, tools to assure investors of profits. Now, of these, notice that A and B kind of relate to B and C as well. A and D can relate to it. So A says tools to improve efficiency and effectiveness. That usually you would think would be done by management, which would be an internal user. So you would think that, these two are similar in that case. D says tools to measure performance. That might be done by internal or external users. So I think it can't be A and B, and they seem to indicate the same. So I think that's not it. And C says tools for external users versus tools to assure investors of profits. Now, of those two, we have external users, and these are external people, the investors. And so it's not going to basically assure profits. So I'm thinking E would be the best choice. Would say E, it's not going to be something that's going to assure anything. Nothing's assured. So the reasons for financial statement analysis does not include E, tools to assure investor profits. Next question. External users of financial information, A, include management, B, include the board of directors, C, are not directly involved in operating the company, D, are directly involved in operations, E, include employees. Let's go through this again using the process of elimination. External users of financial information, A, include management. Now, management you would think is internal versus external. So when we have external, we're probably contrasting in our mind external versus internal. This would be internal. B says include the board of directors. Now we might think, I don't know, maybe that's external versus, they're not run. So let's keep that for now. C says are not directly involved in operating the company. So I would think external users probably aren't directly involved. That seems reasonable. D says are directly involved in operations. So these two are contrasting each other pretty directly, which could indicate it's one of those two. But I don't think it's D because they're and then E says includes employees. So employees are external users. Doesn't seem quite right. I'm going to say no on that. Well, let's keep it with B and C. External users of financial information, either B, include the board of directors, or C, are not directly involved in the operating the company. Of those two, I would think that C is going to be the most appropriate, right? They're not directly involved in operating the company. The board of directors, you can argue, isn't quite directly involved because management is. They basically hire management. So you can make that argument, but from the best answer would be C, because C, would be more, more inclusive of that answer. So I think C would be the final answer. External users of financial information, C, are not directly involved in operating the company.